Hey traders, hope you guys are well, and I wish everyone a very pleasant and happy New Year 2026. And this year I really want to make a difference on this channel. It's been a while since I've made a video, but today I want to give you guys a free strategy that I've been using for a while now, and I'm mixing it in with another strategy. But this one's been more effective and a lot more simple, and I just wanted to share it with you guys and put you on a bit of success going into 2026 with this strategy, hopefully, and just show you a trade that I'm in at the moment. I'm just about to close it, and I'm also going to take you onto the trading view charts and show you guys how to actually set your charts up for this and how to actually trade it. No indicators needed, just a few lines on the chart, and that's it. Maybe one line and just your take profit and your stop loss. That's all you need. And obviously watching your sizing when you enter, playing it safe with your account and your lot sizing. So I'll catch you on the charts, guys, and I really wish you guys a successful trading year this year, and fingers crossed we all have a really successful one. I'm buying here. It looks like a risky trade because I'm buying at the highs, but I'll just show you what I mean by this trade. So a lot of the time traders will try and predict the market and go short, roughly in this region over here. If I show you my crosshair, I'm going to show you on the charts just now on the trading view charts, but a lot of traders will go short after they see a push down, and they'll go maybe have a limit order here, and that's what I also get a lot of. Well, I was getting quite a few losses from doing that, trying to predict the market as it's going higher, trying to get that reversal in, or as the market's dropping, get that, try and get that turning point and try to get that reversal buy set up. But this is just a nice scalp trade that you can just take day in and day out for some good profits. Because what it is you must remember there's always liquidity and there's always stop losses above highs and lows. So I'm just going to actually take profit on this trade now. I'm just going to take you over to the charts, and I'm just going to show you what I mean by this. I'm just going to take this. Let's take a screenshot. I actually want to show my friend this trade setup. So let's just take the profit on this trade. Quick $400. Let me take you over to the trading view charts, and I'll show you guys how you guys can also take this setup day in and day out. Free strategy, but it's very, very powerful. Okay, traders, so on the charts now, I've already closed the trade, but this is basically how the setup looks at the moment. So basically the whole theory behind this is, most traders, as the market is pushing up, they will try short the market. Most traders get an opposing bias as the market's going up. They'll be scared to buy, and when the market's falling, they'll be scared to sell. So generally traders will take an opposing bias and do the opposite. And as price is climbing, in this case a lot of traders would have been short in this area, or even in this area over here. So what I mean by that is, as price is going up, a lot of traders will think, okay, now the market's going to dip, we're at resistance and all of that, and the market's going to drop, then price will continue higher. They'll see this pin bar over here, take a short, maybe they think, oh, we've cleared liquidity over here or something, and the market's going to drop. Price will then drop a little bit like that, come back up. Then they'll see this nice bearish engulfing and be like, okay, the market's going to drop. And then the market will go down very slightly. Maybe you'll be in a few pips profit, and then the market will just carry on climbing up. Okay, so this issue over here is what I used to do a hell of a lot. People may think, oh, we're getting a double top over here, for example. But basically, traders will take an opposing bias and go the other way while the market's pushing in a certain direction. It's a very similar situation as the market is dropping. I'm trying to get a good example. It happens day in and day out in the market. Let me just clear this up. Here's another bullish example right over here. So this is a big bull run right over here. I'll find you guys a bearish example as well, but it's a very dangerous thing that retail traders do. You know, as the market's pushing up, they'll see this kind of thing, or this, you know, they'll see the market pushing down, they'll hop in for a short, the market will bottom out and then come back up. They might see a nice pin bar over here and be like, okay, we've swept the highs over here, let's go short. Market will push up. Same thing here, bearish engulfing, they'll go short. Market will just carry on blasting up and they'll get completely annihilated. This market is very, very bullish at the moment, so maybe I'll go over to Nasdaq. Okay, so here's a good example. Well, there's a good few examples on this one. Let's just go to this day over here, which was the 29th of December. So the market's pushing down. You know, if the market's pushing down over here, people think, okay, let's go long. We've grabbed liquidity or whatever they're thinking. Market will push up a little bit. They'll hop in, get annihilated. They'll see this again. They might have just taken a loss here and then they'll hop in here again and then they'll get annihilated. Market will drop. Okay, they might go long over here again, go a little bit into profit and then get annihilated again right over there. So that day was a very bad day for shorts. The same as on this little trend over here. Even on little moves like this, people will see these sort of candles, and then they'll hop in for longs and they'll just get annihilated by the market. Same thing on the Nasdaq today. I sent my friend this trade earlier. So the market's been pushing up. Now market pulls back a little bit, comes back up. People see this beautiful pin bar to the downside. They hop in a short. They think, oh, we've cleared liquidity, you know, and then basically the market pushes up. So what you want to be doing is you want to be looking for, we can use Nasdaq as well as an example today. We'll grab the long position. So what you're looking for is a pullback for the market to form a top, and then basically, well, let me start that again. You want the trend to form in the market during the day. Now you want to see a bit of a pullback in the trend, okay, in the day's market, in the day's price action, okay, and then basically you want to wait for the market to start pushing in the wrong direction, which will be obviously not in the wrong direction, but in the opposing direction of what retail traders would be thinking. Because as I say, a lot of retail traders would be going short here. So what you want to be doing is waiting for these little pullbacks to happen, such as this little pullback over here. We were bullish, now we're pulling back. Now what you want to be doing is you want to be waiting for price to come back to this high over here. So right over here, and basically you want to be entering a long position right over here, because you have to remember there will be stops waiting, always waiting above highs and lows. Okay, so you want to be putting your stop just below the previous candle that started the move up, so just before the breakout candle, which would have been this pin bar over here. You don't want to enter at this pin bar, you want to wait for price to actually break out. Okay, so you put your buy stop right at this level over here, because there will be money over here, there will be liquidity all over here. This is all liquidity, you know, all resting above here. There'll be liquidity above here as well, but you're basically looking for all that liquidity above the area where price reversed, will look like it was going to reverse. Okay, so it's very simple, and it happens day in and day out in the market, because I cannot tell you how many times I would take losses in the market because I'm trying to predict the bottom and trying to predict the top in the market, and the price will just carry on in a trend in the opposing direction and just basically annihilate you. But it's more of a scalp setup. It's not an actual, like, you don't want to look for major moves in the market unless the market really shoots up very quickly. You can put your stop at break even once you are in profit, once the market's moved, say 5 or 6 pips, and then look to chase that market higher or lower depending on the direction. But you know, as you can see over here, it just happens day in and day out in the market, especially when the markets are trending. You can see over here, you know, markets pushing up, people are going short, maybe here, getting annihilated. Same thing here, people are going short over here, all in this area. Okay, market pulls back a bit, and once it breaks out, this might have been a loss over here because your stop would have been below this breakout candle over here. Okay, but you can see the price ended up going much higher. Okay, so it's a very good little strategy, scalping strategy. If you want to make some money, like look at this example over here. So price starts to push down, which is a real move down. Okay, price fails to break higher. This could have been a long if it did break out, but then price drops down. A lot of retail see this pin bar. Okay, and then what retail do is they go long. But we want to enter when it breaks the low of this candle. And we want to basically ride that market down as far as we can. So we're looking, this would be a perfect short opportunity over here. Okay, the stop would have been a little bit big, so it might have not have been an ideal opportunity, but this is just an example of what happens, you know, with the market in general, with these setups. Here's a classic example over here as well. This would have been a nice opportunity here, because we would have entered here and rode this one up. Okay, stop would have been, you want to give yourself a reasonable stop, a candle or two below the breakout candle. So we would have, this red candle was the breakout candle. We could have had our stop over there, and you can see a nice bit of profit on that trade. So I hope this strategy is making sense. If you have any questions, reach out to me. You can see how beautifully this trade is working out. Keeps on pumping higher. Let's look at the gold trade that I took. Oh, look at that one. Pumping higher. Stops are above here. Liquidity is being grabbed. Okay, liquidity is being taken out. Remember, thousands and millions of dollars of retail or basically retail stops. The banks know it are sitting above here. Okay, so instead of you trying to predict turning points in the market, you want to take these little breakout scalps, and they can even turn out to be longer term trades where you're holding for a couple of hours. All up to you how long you want to hold for. Look for at least, I'd say, for a 1-to-1 risk to reward. But yeah, let me know what you guys think, and I'll catch you in another video soon. And peace out, guys.